Welcome back. You're still watching OpenExchange South Africa. Let's get back to that very important report where economic confidence among business leaders in Africa rose to 53.8% for the second quarter of 2016. This is rising from 53.2% in the previous quarter, according to the YPO Business Confidence Index. Isaac Chalumbira is the Chief Executive Officer at Lion Insurance Group, and Craig Kiggen, who is the Regional Head of Citadel Wealth Management. Both members of YPO are joining us this morning to give us more insight on these numbers. Gentlemen, your numbers seem to show that CEOs are overly optimistic in the African continent.
I don't know if they're overly optimistic. I just think that they're looking forward and looking at where their businesses are and thinking that possibly the signs are showing that there's opportunities in Africa.
Yeah, I agree.
Yeah.
Well, Isaac, when you look at opportunities in Africa, there's also a lot of talk that CEOs or businesses are hoarding cash. Did you get a sense in your survey to say that maybe companies will start spending now that conditions are looking a little bit better?
I think the confidence, it comes from just, if you look at most of our economies are commodities driven. So if you look at what's happening, oil price and some of the commodities recovering a bit. So our sentiment, I would say, really is a reflection of what's happening in the global economy and the sectors that drive most of our economies in Africa.
Are you guys surprised by the resilience of a lot of these countries? I know possibly 3-4 years ago, Africa was the flavor of the month, the next big growth frontier. Then, like you mentioned, commodities came down. Another good example is Russia. You know, the Russian economy was so reliant on the oil price more than halved, and now it's coming out of recession. These economies seem to be a lot more resilient than what people think, because, I mean, commodity prices haven't recovered from their highs from a long stretch, yet these CEOs seem to be pretty confident.
I think resilience is probably the term we should define. I think they came out of a difficult time. I think the companies that have survived this very difficult economics period are the companies that have now going to start showing growth. They've been able to clean up their balance sheets. They've been able to clean up a lot of the compliance issues. And with the stable oil price, or a more stable oil price coming through, what we're finding is that the guys are now starting to say, we're starting to hoard a bit of cash. We're looking a bit forward as a business. Can we invest that? Or if we can't invest it, we need to give it back to our shareholders. Both have positive spins on the market.
Yeah. Isaac, 30% of the CEOs expect the workforce to increase in the next year. This is obviously good news for the unemployed population. But what sectors do you think are going to drive this?
I think, I mean, following the sectors I see mostly, I'm in real estate and retail, right? And what I see is consumer confidence still remaining a little bit stable. So the infrastructure investments, I think, are areas that most of the CEOs that I speak to are interested in.
Well, Craig, looking at business confidence levels, and you talk to different CEOs to get the survey put together, what are some of the concerns that they have going forward? Yes, things are looking a little bit better, but what are some of the concerns that came through when doing the survey?
Critically, governance is a big issue. Governance from a political perspective. So where are we going? I mean, when this survey was done, in particular, we were heading into the election process. So we now post it, and we still don't have absolute clarity as to what's going on. So I think that people are concerned as to offloading some of that cash or investing some of that cash until they've got real clarity on what the long-term consequences of those investments are going to be.
And are you seeing more or less state influence? Because often I feel the less the better, where you let the private sector, you know, get involved and fill the gaps and, you know, fix the problems that arise. But obviously you need that state intervention to provide the infrastructure. So are you seeing less or more? And are, you know, is the private sector really playing a big part?
I think that what we're seeing more is a symbiotic relationship, one where the state is working closer with the business environment to be able to jointly build a South Africa and a successful business environment. So I think state intervention is important at the right points, with the right messages, and delivering in the appropriate manner from a political perspective.
Craig, still there's 32% of your CEOs who feel like conditions may worsen going forward. Obviously, a lot of this attributed to a commodity-driven economy across the continent. But what are some of the feedback that was you were getting in regards to this particular thought?
You know, again, it's, and I apologize, I'm repeating myself, but it is predominantly around the instability of the various economies across the African base. And it's uncertainty. And I think we're still in an uncertain space. And I think that you're always going to have two sides of the coin. The one side of that coin is going to be people who are going to be on the pessimistic side, and we're going to have the overly optimistic side. But I think once we have less volatility, less uncertainty in how the market is being driven, I think that we'll see this index, in particular in Africa, start ticking up back to its historic 60-point mark that we're accustomed to.
Final point, Craig. YPO is made of youthful executives running businesses across the continent. What would you say, is there an edge in regards to decision making that is on account of youthfulness?
I think that young leaders have very similar experiences, and being young in senior positions in organizations is a difficult place to be. And I think what YPO does very beautifully is it caters for those young leaders to be able to develop as leaders and there in turn grow their organizations on a global basis.
Well, Isaac, when you look at the South African economy, we've had the SACI Business Confidence Index coming out. It's also pointing to a lot of positivity. Yes. When you look at the environment without doing any of these surveys, what are you feeling on the ground?
What we're feeling on the ground is basically is two elements. The first one is that it's going to be interesting what happens post the elections. You know, what happens between national government policy as far as implementation is concerned. But as Craig alluded to, say most companies have a lot of cash, and they're looking at a situation where we hope government implements the policies, the great policies that they have in place. If they were to implement them, the impact on us and our confidence to invest, I think would probably suffice.
We'll have to wait and see. Thank you so much for joining us, gentlemen. Well, that was Craig Kiggen, Regional Head at Citadel Wealth Management, and Isaac Chalumbira, CEO of Lion Share Investment Group. Well, a big thank you to Byron Lotter from Vestact. He was also our guest host and market watcher for today. We cross now to West Africa for news out of the region. Didi is standing by.